top higher today being Tuesday, March 21st, 2023, as Treasury Secretary Janet Yellen reassured Wall Street that she would have safeguards put in place to prevent another banking catastrophe. Markets, this is our second day in a row that we're up. Is this the good times are back, or is this just the calm before the storm? Because we have a critical Fed decision coming out tomorrow, ladies and gentlemen. Welcome, everyone, to Buy, Hold, Sell. I am your trader, Todd Schoenberger, and I am joined by my friend and co-host, Tobin Smith, out in, well, rainy and hot Scottsdale, Arizona.
There you go.
And we are bringing our longtime friend back, Jordan Kimmel. He is the Chief Equity Strategist and Portfolio Manager at ValuEngine Capital Management and also host of the Magnet Minutes podcast. Jordan, welcome back to Buy, Hold, Sell. We're so happy you're here with us.
It's great to be with you, and the market's giving us a fire show, so a lot to get into. Great to be back with both of you.
No doubt about it. Well, listen, I do want to start with you right now because I know that you have on your own podcast, you have had a long list of A-list guests that have been rolling through. You just interviewed Jim Rogers on your show. I know he had quite a few comments about the Federal Reserve. But what do you think is going to happen? Because the million-dollar question that everybody wants to know is the Fed going to just maybe stall tomorrow, or are they going to actually hike by 25 basis points? What do you think?
Right, and the question you asked is, what do I think they're going to do? Not what do I think they're going to or should do, and we'll get into both of those. What I think they do tomorrow is they raise by a quarter of a point, and they assure everybody that you're seeing a lot of disinflation. A lot of the work is starting to get done. They're not looking to brain damage the economy. They're not looking to put the country out of work, but that the work is not done. You'll hear them say the work is not done, but they're starting to see some effects. What they have done, you realize, is leave rates way too low for too long, and then they oversteered it too high too fast. If I was giving them advice, I'd say don't touch a thing tomorrow. Just reassure everybody you'll be watching. But you asked what I think they'll do. I think they'll raise by a quarter and reassure everybody that they'll just keep looking, but that most of the work has been done. They still have some work to do.
Toby?
Well, I'm coming from a different place on this than Jordan for a couple of reasons. Number one, they're going to raise 25 basis points. And I believe, again, talking to a lot of people very near to those folks, is that the reason why they're going to do it is that if they didn't do it, then the message they would be sending to the market is completely negates what they've been saying. Hey, we got the world on our shoulders. We got the Secretary of Treasury. We got everybody. We put the money in. We've raised these deposit limits for FDIC, etc. We've done everything. So there's no reason to panic. If they stop raising, or, God help us if they cut, that would be the diametric observation. It would say, we're freaked out and we're freaking going to cut these rates because we're the cat's out of the bag, whatever, metaphor you want to use. They don't want to do that. The last thing they want to do is to frighten an already frightened marketplace. And that is a bad message to say that while we still have inflation that's 300% higher than what our goal is, we're now going to stop. You can't have both worlds. I've said this many times that they're stuck in a box. They're damned if they do, they're damned if they don't. But they're stuck in their own box. They can't say, hey, Jordan, you know what we're going to do? We're going to raise our inflation target to 3%. Bond market, just shits the bed, right? It just all goes to hell. If they do that, then interest rates go up, and then that becomes inflationary tightening. So they're on, they got to stick it up, courage it out here. It's doing what's happening. They never could say that we're going to break something because, that would frighten people. I think we're all mature adults. We've been through this. They have to break stuff. If they don't break stuff, then we have this entrenched,
right,
economy, and the rates just keep going up and up and up. We still have 11 million job openings for 5 million people, and there's nothing disinflationary there. I'll tell you that.
Well, 2 weeks ago, we were actually talking about a 50 basis point increase.
Yeah,
then
true.
all of a sudden, it just quickly pivoted from there. And you are right, though. I do believe that the Fed does stall on this one. They say, look, no change whatsoever. The next meeting's not for 6 weeks. I mean, 2 weeks ago, we're talking 50 basis points. What's going to happen 6 weeks from now? I think that's where the real danger comes in. Jordan, so what are you telling investors these days? I mean, because I'm sure your investors have a ton of questions wondering, what's next? Even after tomorrow's decision, there's still a lot of work to do on the inflation side.
Right. Well, last time I was on the show, it was all the way back, I guess, in the summertime. And what we kind of was saying, what I was saying is that, we have not exited the bear market yet. And we've seen some improvement in some of the gauges, but the fact is, we're in a really, really difficult stock market to begin with. A lot of the pain has happened in the super, super high valuation, unprofitable companies that didn't belong there to begin with. But what we're seeing is like a rolling bear market where they're attacking every sector one at a time. If I would have told you guys in the summertime that they would cut price of oil by 50%, you wouldn't have believed it. Oil looked like it was kind of unstoppable. So what it is, I stick to my knitting. Believe it or not, when I run the magnet model, I can find dozens of companies right now which have the accelerating margins, accelerating cash flow, institutions accumulating them, but it's not a lot. It's not the whole market. The market is not healthy. So what I'm basically saying is that it's okay to hold some powder here right now. We don't have to be fully invested. I did really cut back my shorts significantly in the areas where I short. But it has finally turned into a stock picker's market. I think for the next couple of years, index guys might be frustrated. But I'll consider myself lucky in the last few months. Maybe luck is preparedness. But it's a difficult market. And the other thing I just want to add quickly, I call this like it's an Alice in Wonderland market, where, one day it's the pill that makes you tall, the next pill that makes you small. There's been unrealistic runs of unprofitable companies. If I would have told you they'd knock 70% off NVIDIA in a couple months and it would double in a month or so, it's weird behavior. The same thing with Tesla. The behavior is a lot of, I think, program trading, and the programs are trading with each other. It's not quite rational at the moment, and therefore defense is a really smart approach.
Well, there's no question, Jordan, that at my new publishing company, True Market Insiders, we follow dark pools, we follow the algo trading, et cetera. And first off, the January effect worked, right? Everybody was sold out. They took their tax loss into December. So the crappiest companies were the most sold. So if you were trading it for a week or two, you went long. And oh, by the way, everybody was so short. There was record short interest going into that first week. So you got that going. The Traders Almanac guys, all those guys were right. But that was just mechanics. And if everything I have followed has been about mechanics. Now, the sectors within the sectors, again, my beloved product tankers and my oil tankers, and guys that these things are up 60% over the last 3 months. They're idiosyncratic. The Russians stopped delivering oil. You have to ship twice as far. Rates went up 400%. I mean, that's what I would call the microeconomics or the micro sectors. So at Transformity Wealth Management, we do focus on the micro sectors, and we're still up like 32%, for the year, and also getting big dividends. China reopening was like going to be a big thing for oil. Everybody's, oh yeah, my God, they're the biggest importer, et cetera. But it's going slow. It's only really until the last couple of days have we seen sort of a tradable bottom in oil. And normally you would have said that like gold, and hey, oil's going to be $95. They keep moving it back. It's going to be 95.
Yeah.
Q2,
95, Tobin. It was 120. They said it was going to be 200. In a couple of months.
Yeah, but they're in that really tall building downtown, and I'm done.
Yeah, pulling the numbers. Pulling the numbers out of the sky. I mean, there's zero academics, if you really think about it, when they start coming up with these figures. They just do it based off of the trend and say, oh yeah, this sounds like a good round number. Let's throw it out there and see what happens.
Yeah, well,
but Tobin, your point is so well taken that when you dig below the initial large sector and you go to the subsector and the micro sector, there's a lot of activity. And even those liners, the shippers got hit hard for a month or two. And if you were really just trading on moving averages, you may have been tossed out. If you didn't know what you were doing and you were just literally following moving averages, you would have got tossed out of a lot of those ideas, and then they all roared back. And to your point, they hit new highs. And if you have a bushel of them, you're making bushels.
Ooh, mark that down, Todd.
Yeah, that's a hot
That's
take.
the smartest thing Jordan has ever said on this show.
Yeah, no doubt about it. Yeah, definitely for show business. That's our hot take of the
Well,
day.
I'll give Jordan a bit. You know, at TMI, our sector analysis was very strong on semiconductors going into the year, and as the macro guy, I was more afraid of just too many semiconductors. In other words, the EV sales were slowed down, so on and so forth. Semiconductors have been quite strong, and we're adding a couple individual names here that I didn't think I was going to, be able to do. The other thing I'd say, Todd, is that this head whipping, head spinning makes people, particularly traders, it just gives them a quick trigger. Everything they're doing now. On the other side, all of our solar energy stocks, another micro segment, hit 52-week highs today. Solar Edge, M-Phase, Canadian Solar, all of those ones that we've owned because essentially driven by the Inflation Reduction Act, the favorite euphemism of all time. It's $725 billion, plus European is about 1.2 trillion. You add that all up together, that's about $2 trillion of mandated spending. And so again, if I told you like 3 months ago, yeah, we're buying Enphase Solar Energy and Solar Edge and Array, and you'd say, well, why on earth are you doing that? And I said, well, if you forget about being afraid of everything and you just put your logic cap on, some of these guys are sold out for 6-9 months ahead. Even I can do that math in terms of earnings per share and growth. So we've always tried to say buy holds up. There's a bull market. We don't say that. But there are micro sectors that are working, and so but you have to work at it, or you have to subscribe to something like what Jordan sells or I sell, which actually tells you what's going on. If you're doing this part time, I'm telling you, I have this thing here. I had to say something off my face today. Of course, the doctor's like 35. There's a freaking waiting list, out there, yazoo. I walk in and the first thing is, Tobin, oh man, I love you on Fox News. Listen, can you tell me about this stock? This, he pulls up this like stocks. I said, dude, I'm here like I'm a Scotch Irishman, man. I got skin cancer all over the place, and you're like asking me about stocks. Well, there's still that element. He's not quite a Yomo, Folo, Momo, whatever, but they want to buy something, and they just need a little guidance as to where to look.
Yeah, I have to agree with you there. Well, I do find it interesting with the narrative going into the month was all about the job, the hot labor market. Then obviously there was a pivot. The pivot was actually took place in the narrative for the Fed. I know Jay Powell's going to be talking about obviously the issues with the banking sector, but he's obviously going to talk about how the hot labor market, and then the PCE data comes out on Friday after the Fed meeting, and that is the favorite of the Fed when they start looking at the inflation gauge.
Yeah, core personal consumption index expenditures is the best one because it's not looking so far back behind. It actually is, a little more real time. They're all lagging indicators, Todd, and that's the thing, Jordan, that always cracks me up. Everybody's all jiggy about stuff that happened 6 months ago or 3 months ago,
right?
And now I'm making a decision going forward based on what happened in the past. How do you forecast that way? I think that's just lazy.
Let me make a point here. It's kind of interesting is that
we'll tell you whether it's interesting, Jordan. Okay. Don't get so cocky.
So if you've been around as long as I have, and I had Magnet Fund open in 1998, when long-term capital was unraveling, people really didn't know what was going on. And if you haven't read the book When Genius Fails, you really should, because what happened was they took in an orchestrated way. They took Greenspan in front of the camera. He was saying, my hands are tied, our hands are tied, interest rates and so on. Down in the Fed building, they had all the big bankers and brokerage firms, and they pledged to start attacking the shorts. And no one knew what was going on for a couple of years. So one of the points I want to make that's happening right now is while everyone is focused on a quarter point, half point, or no point tomorrow, what has happened is QE opened up with these banks hemorrhaging. So I think what's happening is the Fed has its foot on both pedals right now.
Well, you're saying putting the money into the banks, Jordan, is essentially
they're
quantitative
liquidating,
easing.
they're putting money in,
Yeah.
right? And at the same time, they're raising rates. And so they have their feet on both pedals.
Yeah.
But what you don't really know is what's going on behind the scenes. And so
Well, that's why it's called behind the scenes, Jordan. We're supposed to.
Well, I'm not a director. I'm not a director, but the thing is that they like a divided house. They like the Republicans yelling at the Democrats. What they don't want is people getting unified, saying we can't afford anything and going over the wall in the White House. So they're going to start throwing money into the system while they're talking about fighting inflation. And so the Fed is known for oversteering, and Toby said it right. They're in a rock and a hard place, and don't expect the Fed to bail out your bad investments. You actually have to know what you're doing and not just trade on moving averages.
Okay. Well, listen, let's leave it right there, because coming up after the break, Jordan, I really want to get some of these the comments that Jim Rogers gave to you on your show. I know he had some zingers out there about the Federal Reserve, and I know the audience definitely wants to hear what he had to say.
Jim Rogers. Sorry.
All right, so keep it here on Buy, Hold, Sell. We'll be right back after the break.
Hi everyone, I'm Veronica Dudo, and welcome to Buy,
Hold, Sell. If you have the Russians that are going into Ukraine, the Americans and the Germans and everyone else in Europe is going to say, hell no.
If Russia doing things, logically was their MO, I'd agree with you. Yeah, Todd, why don't you get him on a phone call right now? Hello, you.
Stocks were up the second straight day as Treasury Secretary Janet Yellen came out, and she did reassure everyone on Wall Street that, hey, guess what? That banking issue that we just had, it's a one-stop deal. You don't have to worry about it anymore.
Snap, it's gone. Snap,
it's gone.
Yeah.
It is gone. It's evaporated. No more problems in the world. Hip, hip, hooray. I tell you, good things are here. So welcome back to Buy, Hold, Sell. We do have Jordan Kimmel with us. He is the Chief Equity Strategist and Portfolio Manager for ValuEngine Capital Management, and also the host for Magnet Minutes podcast. And I want to talk about that podcast because you just had Jim Rogers on your show, a legendary investor. And I know that you really got into a bit of a, I would say, a spirited conversation, one-on-one, talking about the Federal Reserve. So, Jordan, tell the audience, enlighten the audience, because I know they're probably on the edge of their seats right now. They want to know, what did Mr. Rogers have to say?
Right. And so I'll remind you, and I'll remind them, they can come to Magnet Minutes on YouTube. And this is maybe the third time we've had him on. He is a good friend, a colleague. And again, he's controversial. He's often, overly bearish. But, what he pointed out, and we'll get into the Fed in 1 second, but what he pointed out is there's a structural problem. The structural problem is the United States used to be a creditor nation, and now it's the largest debtor nation in the history of the world. And what we're talking about is trillions upon trillions. They just can't stop spending. So it's not a matter
trillion, all right, 33 trillion. Come on, man. It's not that much.
And so what it is that, the Fed can't engineer yourself out of too much debt. And just a couple of years ago, by the way, I was hoping and praying that they were going to do what someone floated, this idea of 100-year 1% bond.
Absolutely.
Oh my God, that would have taken care of a lot of things, because now what you have is the debt coverage wasn't even that high with all the debt 2 years ago. Now suddenly, when you're paying a 4 and 5% 1-year bond, it's an impossible place for the country to be in. But what Jimmy was saying, and what he likes to say, is the Fed are a bunch of morons, and he really doesn't pull punches, And what he talked about is the fact that they can't do anything, that we'd all like to wipe away the problems, like you just mentioned, that Yellen said, and all of a sudden the banks are capitalized and there's not too much debt. But when you left zero rates, and this was the mistake,
Yeah,
for some reason, You remember when the country really needed some life support and they said, we're going to zero? Well, the markets took off. You don't leave rates at zero for 10 years. It leads to bad behavior. And so, the thing I want to say is as the silver lining, if you will, what he said was, look, this time it's really different. And we know if you're in the business, those are the four most dangerous words.
Yeah.
This time it's different. But he said, the reason this time it's different is the world's really going to end. Right? And this time, though, it does end. And then he
How
laughed.
does he know?
And we laughed. We laughed and he laughed. We said, after it ends, let's call each other and remind us to buy hand over fist. And that's the lesson, is that when it's really darkest and people are the most scared in the world, and the most difficult thing it is to do is to buy something, you know what you should do? You should buy something.
Well, that's good advice. I'm sure it's tongue in cheek. Remember, Jim and George Soros, had the sort of the world's greatest score, being short the British pound and
Right.
gilts, and made
Sitting in England while they were doing it.
Yeah, made $1 billion, very famous. Jim has little person syndrome, in my opinion. He first off, he thinks he is God, and then when he said that the world's going to end, well, then you can just pray to me. That would be Jim. He's right about every 18 years, so maybe pretty soon, we're coming up. But he made so much money, he could be wrong for 18 years and still be a billionaire. That I like. That I'm very impressed with. But there's very few ways to make money, in my opinion, off of what he actually brings to the table, because he mostly is about commodities and gold and silver and so on and so forth. The dollar is going against him for a long while. We just started to get the dollar come down. And I thought what you were going to say, Jordan, is that he would say, hey, what the dollar is going to be coming way down because, our $33 trillion went from 2% of the federal budget for interest coverage now to 5.5%. And that something's got to break there. And that means that they're going to have to cut rates significantly, which is going to bring the dollar way down. We are just starting to add some silver positions, some gold, just simply with the Credit Suisse ETFs, if they stay in business. I'm waiting for that. But we have done very well in high dividend silver, SLVO, for instance, when the dollar was coming down a couple of years ago. It's a covered call writing ETF. We're getting about 23% yield from it, from the covered call writing. And then as the dollar comes down, silver goes up in value. So it's a win-win. I mean, there's some ways to play that, but only Jim would say the world's coming to an end and not have a smile on his face.
But he had a smile on his face,
Oh,
and he was saying it tongue in cheek. And I'm going to defend him a little bit more, because the fact is he does insane amount of homework. He did make an insane amount of money. He actually put out his book, Hot Commodities, about the week before commodities bottomed way back then. And so one of the more actionable ideas, Todd, you asked about actionable ideas, and Tobin talked about, the shipping companies and using some micro, trends. Well, what he talked about is this whole idea towards electric vehicles uses a tremendous amount of copper and other materials. So I think Jim definitely does believe that there's going to be a major commodity move again. And if you think about it, a lot of companies that rank that high on my model and do, some SQM, these are copper plays. They actually got beaten to, pulp in the last few months. And the macro.
And there's a reason for that, Jordan. The reason is that EV sales have peaked, and, all the early stuff went out. Now, all of it, lithium's down 40%, graphite's down 35%. All of those EV metals, I think, Jordan, people just thought it was such a slam dunk. More EVs, not enough metals, it's going to go up. But someone forgot to tell them that China consumes most of the copper for real estate development. They consume most of the iron ore to make steel for real estate development. And they're, literally $2.5 trillion underwater on real estate. And at the margin, as you know, commodities are priced by the marginal buyer, i.e. the price insensitive buyer. And right now, the price insensitive buyer is pretty sensitive. So I
Right.
personally am not there. Silver,
There was price
gold.
action took me out of them too. I agree
Yeah,
with you.
right.
Price
Yeah.
action took me out of them. And sometimes you can't get the macro story figured out, but price action, Magnet's all about this combination about the fundamentals with the technicals, and there's very few that will fit that category. But if one of them is not there, we're not there.
Yeah.
And
Well, I know you've been doing it a long time, and you survived a long time, and you only survive a long time if you make more money for people than you lose it. So,
well, but you know what? I'm going to remind myself or remind you. My foot fits right in my mouth, and so every time I tell somebody how bright I am or how smart I am, the market has a way of kind of
Making us
teaching
all
you
humble.
a big lesson. So you
Yeah.
got to stay humble, use your discipline, and like I've said, I have very disciplined. And again, I'm a real believer in never letting price go too far against you. So I'll be wrong, but I'm not wrong for long. I could always come back into a trade, but so many people will say, Lucent has all the patents in the world.
Right.
Yeah.
Those royalties are gonna make billions and billions. And then Cisco came in and said, wait, we don't need your stuff anymore.
Right? And not too many people under 30 ever heard of Woolworths. And so, things come and go, and you have to be willing to let go on price when it goes against you.
Yeah, that just
Yeah.
works. I would also like to admit right now that when we were 10 years old, we used to go steal candy out of the Woolworth store, and
Well, you
I've
put
always-
them out of business.
I've always felt very bad about that.
The five and dime.
So that's
right.
what happened to Woolworths.
Yeah,
huh?
exactly. We
I
hit
knew
that
something
Alhambra
had to be-
store hard, and it took them out.
Something was there behind the scenes. It was you.
Hey, George, so quit mealy mouthed. What are you buying now?
Yeah.
Okay,
let's get into it.
so I'm gonna give you just, I don't like to talk too many names, but I'm gonna give you one because you brought something up that's really important. You might not have heard of Technoglass, right? Technoglass is a company that makes specialty for building steel in this unusual platform. So it trades at 11 PE with triple digit revenue growth, higher margins. I never would have heard of it. Magnet found it. TGLS. It's one of our holdings. I went on, somebody else's show. It was Fox. We'll mention it, but about a month ago or so, and
Not familiar.
SCMI, was my pick, and why? Because it was the #1 ranked technology company in the country, and so. These are what I'm long. These are actual, not second tier companies, but they're not Main Street and Broadway. So I don't think you can make a lot of money when everyone in the whole world is in love with an individual company. You ask anyone what they want to buy, you give them an impassioned talk. Their first question is, "What do you think of Apple?"
Yeah, right.
Right?
Well, yeah, good
and
point.
everyone
I would
owns it.
push back against you, Jordan, in that the thing that we're short the most are office building REITs. I mean, we've been short those for a long while.
Okay, well,
and-
this isn't a REIT. This is a.
I understand it, but they sell into the office building space, and there's zero other than Austin, Texas, and Phoenix, Arizona. There's not a lot of office building going on at the margin, and a lot of at least in we have 25 projects. My wife's from Canada, so I say project. We have 25 projects in Greater Phoenix that have been stopped, and they're not even at the putting up the steel and all that stuff. So I'd be a little fearful on that. I check to make sure what their percentage of glasses they're selling into the industrial space, and the same thing like I guess we're long, just about ready to get long. ASML, again, this is the company that makes the only machine that makes only 3mm chips that we now have $75 billion of new plants being built. And China is no longer able to buy ASML. That's part of the deal. So guess what? They're going everywhere. We have 3 plants here in Arizona. We have 5 plants in the United States, Germany, Japan, everybody. ASML is like an annuity. Its revenue always goes up. Every one of the machines they sell is about $750 million. You
Right.
cannot be in the business of making chips without ASML, the
Right.
lithography. And that's the type of have to have no matter what's happening. But now that we have the US federal government putting almost $1 billion into the pockets of these guys, Germany the same way, UK the same way, France the same way. So semiconductor is now economic security, where before it was just, dude, I need more speed. I need more memory, you know?
So let me give you one more now that we're bringing out some names. And
Yeah.
so I'm not only looking to buy all-time highs, you know, the whole idea is sometimes people will get frustrated. So you mentioned AI, maybe we were on commercial before we talked, but you know, Palantir is a really, really interesting name that went down around 80 to 90%. Now the thing based now for a year and then kind of shot out of a cannon about 2 months ago. It pulled right back in. And so Palantir is a company that reminds me again, you know, history doesn't repeat, but there was a time when Oracle was considered a fraud and it went from 25, 28 to 5. They said there was no product, there was no business. And at $5, all of a sudden it became one of the best investments of all time.
I saw Larry Ellison get in a fight in San Francisco, basically on that deal. And Larry Ellison is not a big man. This was at Sam's in San Francisco. And he was there with a group, and I was there with a group next to him. And some guy basically came up and said that, you know, there's no there, Oracle. What is it? What is this database, this relational database thing? How does that work? Come on, you're nothing but a fraud. Boom!
They said there was no cloud. So on that note, Todd, you talked me into a couple of names. For my compliance team, I'm going to remind everybody these are not recommendations for everybody. You have to do your homework. Everyone's got their own risk tolerance. I will say the names I mentioned were long each one of them. Those are some of our bigger positions. You know, we're actually added to all three of those names I mentioned in the last couple of weeks.
Jordan, I tell you, Palantir was the most overvalued thing in the world, number one. Number two, all the business they do up to the last 6 months ago was, you know, all stuff they couldn't talk about because it was for the CIA guys. In my network of people, which is now about 1,500 subject matter experts around the world, Palantir has come up twice. And we are about to add it in our AI side because their AI, people don't understand it all because nobody can see it. You know, it's hidden behind the curtain, right? But the other side of it is defense spending. So our thesis is another, you know, back in my change wave days, I said a change quake was a secular transformation, you know, S-curve transformation that we're now going through this upslope and we're waiting. The difference between me and Kathy Wood is Kathy Wood got the upslope, but she didn't consider the downslope. So our whole idea at Transformity Investor is, which just sold 1,600 new subscriptions, by the way, this last week. Is
congratulations.
Thank you. That you know, you gotta really pull for a compliment around here. That the new S curves that have happened because of post-COVID. Because remember, there's the reverse S curve too. No one thought that, geez, well, if Zoom was selling at $22 and now everybody Zooms. And it was selling at $425. Everybody extrapolates. That's the failure in S-curve investing. It's great to ride that wave up, but at some point in time, you start to saturate. You've sold everybody you can, but the losers keep extrapolating the growth as if it's never going to go down. This is a Viagra channel chart, by the way. Okay.
And so I think it's super great point. And on the Palantir, I remember when it came out, and I thought it was overhyped. We don't buy IPOs anyway. We let them settle. Well, this thing settled down 90%.
Yeah.
And then it based. It based for a while, and now it's on the S curve. It would be now what you call a 1B, 2A, and we expect to be there for a couple of years.
Well, it's funny you say we say, you know, I flunked algebra, but I was great at calculus, and so the rate of change or the rate of change. So when you want to be fancy, you say, well, the second derivative. No, dude, it's just look at when the demand is more than supply. the sales go up, the revenue goes up, the EPS, et cetera. And if you could, make a new product there, then again, it continue to go up. But when you get, the United States spends $782 billion a year on defense. On a relative basis, all the EU has spent about $200 billion a year. So now that they understand that, Russia will invade you, shockingly, now they're going to be up to about $780 billion. And that's going to Lockheed, that's going to Martin Marietta, which is now, part of Raytheon. It's those Stinger missiles, baby, the shoulder ones, the high ones, that's the new warfare. And
Keep
our
us safe, man.
and
Keep
our
us safe.
HIMAR missiles. You will not want to F with somebody who's got an unlimited amount of HIMAR missiles, because you're going to be, eating dust. So another sectoral play that we've done very well in is in, the NATO 2.0, which is everybody actually pays into the freaking thing. And Japan is now joining, because now we have the South Pacific. So now Korea and Japan have taken their defense spending up because obviously China is going to invade Taiwan, and we're not going to want to let that happen. So now, and those are, Jordan, those better. These are like 8, 9, 10 PE stocks. They're priced as if we were in the post Cold War. Well, we're not in the post Cold War anymore. We're in the hot war zone, and so that is a secular transformation that we at Transformity
really solid ideas, and they have really good relative strength. And sometimes you don't have to be a genius, and you proved it.
By the end,
it's right under your nose, or right under my big one.
Well, those are solid ideas, and for the audience, we will actually tweet out the stocks that Jordan and Toby talked about. If you are not already following us, please do so at Buy, Hold, Sell TV on Twitter, and we will get those out to you.
When we go live on Apple Plus and on Roku, because then I'll be able to drop F-bombs and I can't get them blocked out.
You broke the news. Thursday, June 1st, 4 o'clock, we will be live on Apple TV and Roku. It will be Apple's first non-sports live show in their history. So I look for a lot of media.
Congratulations to you, man. That's big. Congratulations.
Thank you. Yeah, we're very excited.
It would be nice if Todd had something to do with it, but I'm kidding. Todd has been awesome.
There you go.
Todd has been awesome. So we're looking forward to it. And we're going to do one, I guarantee you, Saturday morning at 10 o'clock in the East Coast. We're going to do Bulls and Bears, a retrospective of Bulls and Bears.
Well, shake me out of bed. I'll be ready to join you guys.
Absolutely. All right. So listen, coming up tomorrow on Buy, Hold, Sell, we have Liz Ann Saunders is going to be joining us. She's the chief investment strategist at Charles Schwab. I'm sure you've seen her all over the financial press and heard her and read about her in the papers. Well, she's going to be with us as our featured guest tomorrow, so be sure to check that out. So listen, on behalf of Tobin Smith and Jordan Kimmel from ValuEngine Capital Management and host the Magnet Minutes podcast, and you can just simply Google it or go on YouTube. You will find it there. We want to thank everybody for joining us today on Buy, Hold, Sell. We'll catch you next time. Take care.
It's been fun. Thanks.
Buy, Hold, Sell, brought to you by CrossCheck Management. Hi, everyone. I'm Veronica Dudo, and welcome to Buy,
Hold, Sell. If you have the Russians that are going into Ukraine, the Americans and the Germans and everyone else in Europe is going to say, hell no.
If Russia doing things, logically was their MO, I'd agree with you. Yeah, Todd, why don't you get him on a phone call right now? Hello.
Financial News TV, just the way you like it. Fast-paced, unadulterated, in-your-face, rock and roll style. Join us next time on Buy, Hold, Sell Live.
Oh, yeah, I'm going to remember all that. I can't even remember. Oh, God. Yeah, well, that does. I want you to, oh, my God. Fast-paced, no, oh, sorry.
Take one.
Fast-paced, no holds barred, in-your-face, rock and roll style.
Woohoo! Let's kick some ass.
I want you to smash that like button.